Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to join the Passive Income Posse by clicking that subscribe button below. Super excited for this episode. Joining me is Seth. Welcome, Seth. Please go ahead and give yourself an introduction.
Hey, thank you for having me on today, Dave. So I'm Seth. I am outdoor finance. I am 29 years old. From North Carolina. Right now, in my career, I'm a manufacturing engineer. Been doing that for a few years, and just really excited to be on with you today.
Yeah. Well, first, thank you so much for coming on and spending time with me here and everyone on the Passive Income Podcast. Should be a great conversation. First, I kind of want to ask you about the Twitter handle, Outdoor Finance. I love it. It's great. So obviously you're an outdoor enthusiast, I would guess,
Yeah.
and then obviously combining that with the finance handle as well. So if you just want
Yes.
to talk about that for a second.
Yeah. So when I originally made the account, I made the account back in September of 2023, and I originally had wanted to kind of split time between like outdoor content and finance content. But then I kind of decided to pivot and go mostly strictly finance content. And then you'll occasionally see me talking about fishing or maybe posting a catch or hike or something like that. But
Yeah,
I felt like it was probably better to take a themed pivot to finance, but do it from a perspective of, the outdoors, just getting out in nature, kind of showing people that you don't have to be stuck behind a computer to look at all of these numbers all the time. Like
right.
you can find your peace and fund the lifestyle that you want. You just need to be smart with your finances so you don't have to wait until you're 70, 80 years old to do what you want, right?
Yeah, that's great. And speaking of your Twitter, I've noticed like, yeah, just since September, you are growing quickly. So definitely I'll have the link in the description. I give Seth a follow there over there on Twitter at Outdoor Finance. So yeah, and a few other things you sort of brought up there in your opening. You're still young in your late 20s now, but that's still
Yeah.
young. It's still a lot of time on your side, really, right? That's 21 years to 50, 31 years to 60. So I definitely have the advantage of time on your side. So is that also something that you've sort of looked at as you got into investing?
Yeah, absolutely. The biggest thing is I wish that I had known about investing earlier in life. I mean, growing up, I come from a pretty well off family, but my parents came from essentially nothing. I mean, just absolutely nothing, poor upbringings. And then they were both very successful in their career, really turned their lives around and gave me and my sister a really good life. But, one of the things they always taught us was save 10% of what you earn, make sure you save for a rainy day. But there was never really any direction as far as investing. It was just, match your 401k, save 10%. So I really got into this in I guess it was 2019. I actually had a coworker who was like, "Hey, I've got this Robinhood app on my phone. You should check it out sometime." We were just kind of talking about money here and there. And I was like, "Well, I don't own any stocks. I didn't have a 401k at the time." And this was, I guess I would have been 24 at the time. Yeah, probably 24 still. Didn't even
Right.
have a 401k yet, right? I'm just working a full-time retail job at this time, paycheck to paycheck. I wouldn't call it completely paycheck to paycheck, but there were definitely times where money was tight working retail. You don't make a ton. So
Yeah.
anyway, so that kind of I downloaded Robinhood. I think the first stock they gave me was one of those free $5 stocks. I think it was like Prospect Capital or something like that, one of those dividend trap type stocks. And I started seeing 6 cents, 8 cents coming in every month, and I'm like, this is awesome. They're paying me for owning this $5, and they're paying me like 6 to 7 cent just per share. And then it kind of COVID happened, everything went on lockdown, and things got tight. And I kind of went down the finance rabbit hole and decided that I was not going to rely on everybody else. I mean, I'm going to have to make my future happen and make the life that I want. And that's pretty much what led me to this point.
That's awesome. That's a great background and relatively short time frame too, right? 5 years, or
Yeah,
just going
yeah.
on 5 years from 2019 to now we're just fresh into 2024. So I think you made another very interesting point there. Speaking of your parents, and kudos and hats off to them. Great job there. But sort of that difference between saving and investing, right? Over here, you have saving, and hey, save for a rainy day, have that emergency fund, whatever. But and then on this side, you've got the investing. So I guess maybe speak to that a little bit where the light bulb moment was of, hey, saving is good and having some money set aside, like you said, for a rainy day, emergency fund, whatever, saving is good. Where was the light bulb moment? Or was it that particular one you just spoke of, like that Robinhood app, and then
Yeah.
the investing kicked in?
Yeah, so really, I'm not gonna say I've always been the best saver, but I've never been somebody who's just gonna go spend tons and tons of money that I don't have. Of course, I've had a credit card and it's gotten me in trouble a couple times when I was younger, but I've never been somebody who's gonna go rack up thousands and thousands of dollars on a credit card. I never have had that kind of risk tolerance for it. So really what happened is, and I guess a lot of younger investors kind of started like me. We started right there, smack dab in the big drop of COVID. I mean, I think one of the first stocks I bought was probably Apple, just because I didn't know anything about it, but I was, Apple user, had headphones, had the phone, laptop. So like, why not? I'll buy Apple. And then,
And
of
you see
course,
everyone else
everything
around you with
exploded.
an iPhone and an iPad and other
Yeah.
Apple
Yeah.
AirPods and whatever else. So you're like, well, you know,
Yeah.
yeah,
I mean, this is a great company, right? So
yeah,
I'll go ahead and buy this stock. And um, a few others, and really we got spoiled because everything was pretty much a gigantic bull run from there, and it's had its ups and downs since then. But I just continued to stay in that rabbit hole, and I really realized that saving money is great, but saving is not going to get you to early retirement. It's not going to get you to achieve all of your financial goals. We can't, unless you are a super high income earner, you're not going to be able to save enough money as an average person to achieve your financial goals.
yeah, and you're not going to outsave inflation either. That's
Right.
another key thing that we've just everyone has learned in these last 2 or 3 years with the prices of everything skyrocketing and inflation just going crazy.
Right.
And great timing too. Like you get in right at the COVID drop, and then
Yeah.
all of a sudden you look like I'm the best investor ever, and I just started. Like everything that I bought is just turning to gold here. Got the
Well,
Midas touch, right?
yeah, that's a good thing and a bad thing, right? Because your first taste of investing is nothing but a gigantic bull run, and I think a lot of people bought, really bad quality stocks, or they got on the trash crypto like Dogecoin or some of these other like really really bad investments, and they just saw everything going up, and now we're at a time frame later where a lot of people have lost a ton of money on these poor investment choices.
Right.
So
And the
luckily,
meme stocks too are right in there as
yeah,
well. The GameStops and the
yeah.
AMC's and
Yeah, so luckily I never got burnt too bad on any of those. I again had that same mentality of I don't have that much risk tolerance because and the other thing to consider with that is I was working retail, so it's not like I was putting thousands and thousands of dollars in the market. I saw my $200-300 turn into $600-700, and I was like on top of the world for a
yeah.
few months. So yeah, but I just went down the rabbit hole and continued from there, and now I feel like I have, self-educated a lot on the subjects of, stocks, dividends, growth stocks, and most recently, as you've probably noticed, going down into the crypto or Bitcoin space. But yeah,
Yeah, I do wanna get back to crypto and Bitcoin in a second, but I do just wanna quickly give a very special thank you to Millionaire Mentorship for sponsoring this episode of the Passive Income Podcast. Millionaire Mentorship with Abundantly Erica will teach you everything you need to know about options trading, from covered calls to cash secured puts and everything else involved in options trading. Millionaire Mentorship has you covered. Use the link in the description below to get started today. Um, so I just quickly while we're on the topic of options and that, have you dug into that at all? Options trading or covered calls or cash secured puts and all of that, or is that something that you haven't got into yet?
yeah. So I've recently started exploring selling options. Now, of course, I'm sure a lot of newer investors, as well as making those poor choices in penny stocks and all the other low cap stocks, have explored buying options. But yeah, I've recently gotten into selling options. I've owned 100 shares of a company called Peloton. I'm sure we all are familiar with that. I bought it at like $5.15, and I know that that's probably not a great investment, but I actually used to work for them. So after all that ended, so I really liked the company. I just think that they made some very poor financial decisions, but I figured it was a really cheap way to get into uh, option selling. and
Right.
exploring that route. So I've done mostly cash secured puts. I haven't done many. Or I'm sorry, I've done mostly covered calls. I have not done many cash secured puts at this point. But really, the plan is to get to 100 shares of like Apple or Microsoft, which that one might be a little out of reach for a while, but
Right.
Apple for sure, Tesla too. I want to try to start making some weekly income from those companies.
Interesting. Yeah, let's get back to, just before I did that brief, shout out to Abundantly Eric and Millionaire Mentorship. We were discussing crypto and some of the bad choices, and I've been there, made some bad choices in crypto.
Yeah,
But Bitcoin, this past week, we've seen it go on a tear. Um, it really looks like, as we know, the Bitcoin halving is coming up in the next 6 weeks or so,
that's what they keep saying.
and it really does look like it's going to just blow by its all-time high. The all-time high, I think, was just shy of 69,000 USD, and this week it got almost to 64,000, and I'm sure you're like me, I'm just kicking myself for not buying more like 18
Yeah,
months or 2 years ago when it was below 20, and I'm like, "Oh, even if I had to just put 2 or $300 into it at that price, it would that would have tripled now, right?" So,
yeah,
what I did buy has more than doubled. I bought some in around the 30K, 28K mark, and so it has more than doubled, but again, I didn't buy very much, right?
right. Same.
You're always, like, thinking it's always so easy to look back and it's like, "Oh, if I had have done this. Oh, if I had have done that."
Yeah, yeah,
Hindsight is 2020.
yeah. That's right. And I recently just made a position in Bitcoin. This is not the first time I've ever owned it. I've owned it back in I think it was 2021. I probably held it for like a month or 2 months, but I bought in at like $45,000 and then it was stagnant and I didn't really know what I was doing. Just wanted some exposure to crypto and then it went down. So I was like, well, I'll just offload this and put it into VTI or put it into Apple. And so
Right.
I've recently kind of just done some research and decided that I do want to have a small position in it. And I only own a couple $100 and I'm up about maybe 25-30% at this point. So it's been really great. It's just constant growth
Yeah, yeah.
in the last
Well,
few
and it
weeks.
is
So
so volatile, right? But it's
yeah,
volatile kind of over a few years where it's like, I can I would predict, and again, obviously, I don't know the future, but if you look at the cyclical pattern of Bitcoin, sure, it approaches the halving, and then
yeah,
it skyrockets, hits an all-time high, and then a year or so after that, and then it tanks again. So, by is 2026, is it going to be back down to 30 or 40 grand? I think that probably depends on what its all-time high. Like, does it reach 100K in May or June this year? I don't know. I
yeah,
honestly, I do think it will. I think it might go to 125 even. Um, and then that's huge volatility, right? If it goes from an all-time high of, let's say my prediction comes to light and it does hit 125 and then it drops to 30. It's like
yeah,
that is huge volatility, right? And somebody's
yeah.
left holding the bag, the people that they FOMO and buy in at 100 or 110 or whatever, and they think they're doing great when it skyrockets to 125 and then all of a sudden the bottom falls out and they're like all of a sudden you're down from 125 down to 30 or 40, like,
So I guess the question is, if it does hit over 100K, do you sell or do you hold it?
yeah, that's kinda my game plan is to, like, even 90, because like I said, I bought a little bit at the around that 30K mark, so at 90, I've tripled. I would
Yeah,
probably sell. I might hold out for 95 if I think it's still gonna keep going, and then, yeah, somewhere between 90 and 100, I would sell, and then again, looking at the cyclical pattern that's we've got over 10 years of history with Bitcoin now. And then, do I buy back in 2026, assuming it does drop again down to, say, 30 or 40, right? So,
right.
again, this is all speculation because I don't know the future.
Yeah, yeah. I mean, my plan would definitely be. I have said that I want to buy and hold it, and I definitely want to have some type of exposure to crypto. But I think if it were to reach 100K by the end of this year, I just think I'd probably have to sell. And then when it drops back down, if it drops back down, because there's no guarantees, right?
Yeah.
If it drops back down, I'd buy back in at a lower price and just continue that cycle. I think anybody who tells you that there's no value in crypto doesn't know what they're talking about, personally. Now, I'm also in no way, shape, or form telling people to go do 100% of their investments in Bitcoin or even 25%. I mean,
Right.
do what you're comfortable with, but I would never tell somebody to go all in on one investment vehicle, especially not something that is backed by really anything. I mean, I guess it's we say it has value and it does have value, but it's not backed by gold, it's not backed by the US dollar. We were really doing this alternative form of investment because we want something to hedge against the US dollar and hedge against inflation. So I do think there's a lot of value, and a lot of people say there's value to it, but I don't have the risk tolerance to go 100% in again.
Yeah. I would agree with you there, like you said, it's not backed by anything, and so you can't really see its in actual intrinsic value, but I do agree with your statement that there is value to it, and, you know, is it just a store of value? I don't know. Um, which is
Yeah.
actually kind of a great segue to come back to sort of your other investments and the rest of your portfolio. And I would agree with you 100% there to not invest 100% into crypto, into Bitcoin. And so you mentioned a couple others there. I think you might have said VTI or VU. And so I'm just kind of curious now you've kind of have 5 years to look back at sort of what you've done from 2019 now to 2024. I guess, like, is your portfolio heavily weighted in one sector? Like you mentioned Apple, um, trying to trying to increase that position, or is there another sector?
Yeah, I mean, I would say that I'm probably a little bit over leveraged in the tech sector. I mean, my largest holding overall in my taxable is VTI, and I will keep it that way no matter what. So that will always be the core of my holdings. But the next one is Apple, and then the next one is actually Microsoft. And it wasn't Microsoft until they exploded to over $400, and it's just naturally become my third largest position. But so I've got Apple, Microsoft, and what is my next one? Probably SCHD is my fourth largest holding at this point. And if I had to only pick four, I think those are a great four to pick.
Yep.
VTI, Apple, Microsoft, and SCHD. Those will continue to be probably my overweighted positions, and then I will add others as we go. But I probably hold about 12, I think, stocks currently, and that's about where I feel comfortable, somewhere between 10 and 15 positions overall.
Yeah, I think that's great. I'm closer to 25, and it's tough to manage. And even
Yeah,
that, you're like, and you still see more. Like my watch list is way too long. I quite
yeah,
often
that's
go
like
into my
50
watch
deep.
list and be like, okay, I just have to. I'm never buying this one. I'm never buying this one. I just need to like pare down my watch list to make sure that the positions don't. Honestly, I'm a little bit envious of that, of you being, you know, just between 10 and 15. That's a good number. I do like those 4 that you mentioned as well. I don't know as much about VTI as I do SCHD. What I know about SCHD though is like you look at the companies within that basket and it's just like, wow, these are for the most part, you know, the great American companies, the McDonald's, the Coca-Colas, the Home Depots, and I don't know if they have Lowe's in there or not, uh, or Costco
Probably.
or Walmart, but it's just all of these companies that you're like everyone is familiar with. Even up here in Canada, we have all of those companies I just mentioned, obviously, right? And they're
Right.
not just American companies; they're global companies. So
Yeah, and my choice for VTI. So, kind of on that subject, there's a lot of debate between VOO or VTI, but my choice for VTI was that basically when I started investing and I decided to pivot into ETFs, that's the one I picked, and I stuck with it, and I think it's a solid choice. But I do think that, and correct me on the numbers if you know, but I think it's VTI and VOO have about 80% to 90% overlap between each other. It's just VOO is the S&P 500 and VTI is the entire US stock market, but
right,
the S&P 500 makes up the vast majority of the entire US stock market. So in my taxable, I prioritize VTI, but in my 401k and my Roth IRA, I actually prioritize the uh, FXAIX, which is the Fidelity version or Fidelity Index Fund version of VOO. So I do have both in my holdings.
right. And I think that's another great point too. Is having that ETF route, index fund route, where you can kind of get a little piece of all of these different companies, and usually for a small fee. But that small fee is well worth it when somebody, yeah, a professional money manager is watching these stocks
Right.
okay, if one isn't performing, we drop that one and put another one in. Whereas, us just as retail investors, when we're trying to pick individual stocks, it can be very difficult, right?
Right. Well, I mean, they really say like the best investment strategy for the average person is to set it and forget it, right?
Yeah.
And what I've noticed with is my 401k, I decided to just basically go mostly, I think I'm 85% into FXAIX, and I only look at it every time I get paid. I just look at it, look at the investment, see how they're doing. I never touch anything. If I do touch anything, it's going to be to weight more heavily in FXAIX.
Right.
But over time, just not touching that portfolio, I have gained so much more out of that than me trying to pick, one stock here, two stocks there, trying to do it in my taxable. So it kind of is a testament to that. Set it and forget it in really, really quality ETFs. I mean, it's definitely the way to go for most people.
Yeah, you made another great point there, and kind of going back to your age being not quite even 30 years old yet, and the time on your side. But you said every paycheck, which I think is amazing. I call it the consistency, patience, and discipline. That consistency of every paycheck, every other week, every second Thursday or Friday, whenever you get paid, or 15th and 30th of the month, whenever your pay schedule is, that you're taking whatever it is and pay yourself first, whether it's even just $50, $100, 250,
Right,
whatever. Everybody kind of has their own number, and then just making sure that gets into your uh, whichever account you're trying to fund. I know all the all the terms are different. In Canada, we have the TFSA tax free account and RRSP, which are very similar to what you've been talking about, your Roth IRAs and your 401k and that. But exact same concept, right? Every paycheck, that's the consistency part of it. The consistency to just
yeah,
every other week, every pay cycle, make sure you're putting something in every single time. And then, on top of that, then you have the patience to realize, okay, we're playing a long game. And whether your time frame is 10 years, 15, or even for like yourself, 20, 25, maybe 30 years,
right.
that's the patience part of it. And then my third is discipline, where I say, well, you have to have the discipline to have the patience and the consistency.
Yeah, 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 absolutely. I mean, so for me, what's always worked better is to go ahead and get rid of whatever I say I'm going to invest, get rid of that upfront. Because if it stays in my account, it's probably going to get either put on something else, like it's going to get go towards groceries or needs or something else,
Yeah,
or wants, because you have to buy stuff you want every now and then. But typically, I aim to invest about 20% of my income, and that's after my 401k. But as far as the IRA and taxable, I typically aim to go about 20% of what I get from each paycheck, which in the future, once we get some more debt paid down and we have more saved up for a house, I definitely want to bump that up more. But just that consistent 20% every single time, that's what works for me. And
yeah.
go ahead and do it as soon as you get paid. Don't wait till the next week.
Well, exactly, and that's a concept. Pay yourself first. I first read it's actually called The Wealthy Barber, and I'm not sure if you know how old I am. I'm old, and I first read that book in the early '90s, like I want to say 1992 maybe, and that was
I
that,
was born.
and that was the concept that really hit home with me is pay yourself first, and it back then or in that book. The author David Chilton, who I think now follows me on Twitter. I follow him for sure.
Oh, wow.
Yeah, that's another crazy thing, right? Like 30 years ago, I would have never thought that I'd be able to have interactions with him on Twitter.
Right, right,
um, so anyways, yeah, the pay yourself first. I believe, his point was 10%. And, even 10%, 20% is great if you can do 20%, but take that, whether it's 10, 15, 20%, and pay yourself first. And then pay your bills, get your groceries, everything
right,
else, and yeah, you know what? Maybe, I and it obviously does depend on your level of income.
right. It does.
Things can get tight, between paychecks if you're, trying to put $200 every paycheck into an investment account, and then you've only got so much to live on until the next, and the bills keep coming, as as you're definitely aware, right? The
Yeah,
bills
yeah,
don't
they
stop
definitely do.
coming.
Yeah, and then also saving for things that you want or your goals. Like one thing that I've talked about a few times on my Twitter is the fact that we're not homeowners yet, so we are still renting. Now, luckily, we're in a family home right now, so we've been fortunate and helped out, but it's still not free, and it still takes away from that monthly income. So we are really trying our hardest to save for a home,
Yeah.
and it can be difficult because I made a post the other day. It was talking about how it seems like the goalposts just keep being moved. We were really contemplating buying a home back in 2021, and then that was like January of 2021, and then by June and May everything was almost doubled. So yeah, but constantly putting that money away, saving for your goals, and also having that long-term horizon, because if you are constantly thinking short term, those goals are always going to seem so far out of reach.
And so first, saving for a house and buying that first house is an incredible goal, and I wish you the best on that and getting there, and I'm sure
Thank
you
you.
will. I guess my point there though is like it, just basically instead of paying rent, you start paying mortgage to the
Yeah,
bank or whatever mortgage holder. So it's still a significant portion of your income that's going out every month, or even I pay my mortgage biweekly actually. So every paycheck, it's a significant portion of my paycheck that just goes straight to the bank. So
right. Yeah, and that's true. And one thing, we're not blind to the fact that there's a lot of other costs that go on with home ownership too. The biggest thing, and I would encourage people to not overlook renting, because renting can be the better option in some cases.
yeah.
So the other thing is, if a washing machine goes out, that's on you to replace. If you get a pipe busted, that's on you to replace.
When you're the homeowner, yeah, believe me, I
Right,
know.
exactly. Exactly. And a little bit different situation here. Like I said, this is a family home. So I actually helped my dad and uncle remodel some of this house. It's my grandfather's house. So I helped them remodel some of it, as far as running wire underneath the house, doing flooring, um, several other things within this project. But
Yeah,
it is nice to get to live in something like that. But I have a little different situation here where if something does go wrong, I do fix it, but it just depends on what level it is. Like, if the pipes were to rupture, then it wouldn't be on me. But if it's something small, like, I don't know, an appliance goes out, it's probably going to be me who has to replace it.
right, right.
I
And
said
then
small, but
I'm kinda curious too, what is in your area sort of the price of an average house, say, of, I don't know, 1,500 square foot, 2 or 3
I would,
bedroom
I
type
would
of house, like a little
say,
nice family starter home, right? Like
yeah, yeah, and that would be probably what we're in right now. Um, I would say you'd probably be looking anywhere from like 275 to 315 if you're looking at a smaller home like that. And a lot of that is very just dependent on what neighborhood it's in or what location that you're in.
right,
Now, if we go to more major cities, like one of the ones I moved from a couple years ago, you're looking for that same setup. I mean, you're talking $400,000,
right.
350, 400, 450, just depending on what neighborhood it's in.
Yeah, yeah. So I it sounds very similar to, sort of my area, so about that 315 USD would probably be somewhere in the 400 grand, Canadian dollar mark, give or
Right.
take, and, yeah, so that seems about equal to my area, but obviously same thing here in Canada. All we ever hear about is how crazy real estate prices are in Toronto and Vancouver, and it's like, well, of course, Toronto and Vancouver are expensive. That's the same as in the US saying New York and LA and Miami are expensive. It's like, of
Yeah,
course they are,
exactly.
right? Like,
Yeah, exactly. Everybody wants to go there, right? Yeah, and that's the thing, a lot of it just depends on what you want. Like, do you want to be in the middle of nowhere? The prices are probably going to be cheaper there, unless you're somewhere like Montana, Wyoming, especially Montana. Those are places that have exploded in popularity ever since Yellowstone came on TV, and people from California and all the other places and COVID wanted to move away from the cities and started buying up land.
right.
That's kind of an exception to the rule, but for the most part, if you want to be in a rural area, your prices are going to be cheaper, but there are trade-offs. Like, you're not going to have the amenities that you have closer to a big city or even a smaller city.
Yeah,
You're not going to just be able to go to, I don't know, maybe a Target. A lot of places might not have a Target close by, and I know that, like, for my family, my wife couldn't be away from a Target, right? Like we'd have to have one within driving distance.
Well, she won't. She'll never be able to move to Canada. We don't have Targets here.
Oh wow. Oh, I hate to break her heart because she always has wanted to go to Canada.
Well, we do have Walmart and Costco, so she'll be okay.
Yeah, we figured out.
Actually, a quick story. Target did come to Canada, and they lasted about 2 years, give or take. They kind of failed relatively quickly, which is surprising considering how well they do in the US.
It's really surprising. I mean, I feel like they've been doing the same thing for a long time, but they continue to really reinvent themselves as far as, always having a well merchandised store, clean stores, friendly associates. So I mean, it's a complete 360 from going into a Walmart, right? Like a lot of times stuff at Walmarts are not priced, or you've got,
Yeah.
people who act like they didn't want to help you there, or stuff is messy, so it's complete opposite. I always equate it to like I always equate it to like going into a Dollar General versus for your groceries versus going into like a nice Publix or something. That's the way I feel going into a
Mhm.
Target versus a Walmart in most cases.
So do you invest in Target?
I do own Target actually, and I'm not, I don't love Target by any means, but with the amount of money that we spend at Target just on normal household needs, like we typically buy our toilet paper, our paper towels, our cleaning supplies from there. I figured, why not? If I'm going to be spending money there almost every week, then I might as well own some of the company, right?
Yeah, you can just see right down there on the ticker symbol, the Passive Income Posse turn that cash register around T-shirt, and so that's exactly what I call that, the turn that cash register around strategy where, you know, I do the same thing, I pay my cell phone bill to, it's called Bell Canada, so I buy shares in Bell, and I pay my mortgage to Scotiabank, so I buy shares in Bank of Nova Scotia, and in Ontario, everyone pays their, electric bill to, Hydro One, so I buy shares of Hydro One, right? So it's
Right.
very similar idea of what you're saying, "Hey, I'm spending money at Target," and even what you said before about Apple, I have a Apple phone and Apple products, so and right? It's just like it makes
Yeah.
sense. It's the companies that you're familiar with, and if you're paying them money, why not get them to give a little back, right?
Yeah, exactly. It's like, why would you not? Especially if it's somewhere that like Starbucks, Target, Apple. I mean, those are very, I don't want to call them overhyped companies, but they definitely have a cult like following to all of
Yeah,
them. There are people who are diehard Target fans or diehard Starbucks fans or diehard Apple fans. And if you're one of those product users, you've seen the good track record of growth. All of those three companies pay a dividend. And they just pop up everywhere. I mean, everybody has an iPhone. It seems like
I
Targets are
don't.
everywhere, Starbucks are everywhere. So you might as well just make money back.
I have the old, Samsung.
Yeah, I have an iPhone 11 right now. So I got that one like right at the start of the pandemic, and it was like the only iPhone at the Verizon store that I went to. Basically, I destroyed my iPhone 8. I dropped it. The screen shattered. There was no replacing it. So I got that one, and it was like the only one left at the store. And I'm gonna ride that one out until it dies because I just don't want to pay for a new phone right now.
Yeah, that's understandable too. I just curious, do you also own Starbucks? 'Cause, again, like you said, that cult-like following, and Starbucks definitely has that.
Yeah, so I recently just purchased my first share of Starbucks. Actually, I don't even own a whole share yet. I decided that every time we go to Starbucks, I'm gonna put the equivalent amount in stock. So, $7 at a time, $10 at a time, or whatnot. So I just started that. I think it was either last week or week before last. And I'm already at like almost probably three-quarters of a share. So
So
it's a
your
little bit
wife's
of an
spending a lot of
expensive.
money at Starbucks is what you're saying.
It's not just her, it's me too. So
Okay, okay,
yeah,
fair enough.
it's we typically go there. I will usually go get her coffee from Starbucks on Saturday mornings and maybe Sunday mornings. So we typically usually go there on the weekends. But
Right.
we did some traveling over the last couple weeks. We went down to Charleston, South Carolina, and we went and got coffee every morning. So I had to make up for lost time and go ahead and start buying shares for that.
Well, I'm gonna give a shout out to Savings Captain Tom here because he keeps bugging me about how he can't even get a Tim Hortons in North Carolina. So, yeah,
Yeah,
as
no,
we're talking
I've never had it, but he talks really highly of them. I definitely want to try it. And I will say, as far as coffee is concerned, my favorite chain is Caribou Coffee, but they're not a publicly traded company.
Right. Honestly, Tim Hortons is not as good as it used to be, but that I think that's what happens, right? Like, way back in the '80s, they were kinda still it was a big, massive chain, even in the
Right.
'80s, still really kind of a mom and pop type of, coffee shop, and now it's very corporate, so
Yeah.
and obviously, with the expansion that they've had globally, they just can't they just can't maintain what they did 30 or 40 years ago, it just doesn't make sense financially.
Yeah. Well, it's hard for most of these coffee shops to keep up with the Starbucks model. It's just they're almost like mattress firms, right? They just pop up everywhere. On every street corner, you've got a Starbucks.
Yeah, they're even here and like I'm also in a rural area, but I'm quite close to it's a small city of like 50,000 people, but even here there's just in that small city at least 3 or 4 Starbucks, maybe more, I'm not even sure.
Yeah, I mean, it's about the same for me. I'm in a pretty rural area myself. I mean, the closest major city to us is Raleigh, and that's over an hour away. So Raleigh being the state capital of North Carolina,
Yeah,
and we've probably still got 3 or 4 Starbucks to choose from within this area,
yeah, interesting.
and 2 Targets, by the way.
And 2 targets, that's the important part.
That's right.
Um, I've kinda noticed a pattern here too as we've been discussing sort of the stocks you're interested in and that you own. Pretty much all dividend payers. Is that kinda right from that first $5 stock where you a little bit probably a
Yeah.
light bulb moment there of like, "Hey, $5 stock and they're giving me 6 cents every month." So was, like, the dividend investing strategy sorta something that you purposely targeted, or it
Not
just happened because the
necessarily.
companies happen to pay dividends?
Yeah, not necessarily. I mean, I do own growth stocks, like I do own Tesla. I don't know that I'd consider Peloton. I talked about I own 100 shares of those earlier. I don't know that I consider that a growth stock. That's kind of one of those I was just learning how to trade options on, and we'll see if it comes back up to $10 or something. But I
Right.
do own some non-dividend payers, but I guess you're right. For the most part, I do own probably 90% dividend payers, and um, growth stocks are great. I love growth stocks as well, but I just feel like with the dividend stocks, you have some extra income coming in and buying back shares that way, and that's just always been my investing style. I had some really good influences from YouTube starting out. I went down, excuse me, I went down and probably started following people like Andre Jick first, and then Graham Stephan, people like them. So
Yeah.
I've gone down all the avenues. Of course, I don't own real estate yet. That's something I want to get into in the future. But people like people like the big people of YouTube, like Graham Stephan and Andre Jick, and then another one I've really enjoyed following over the years is a guy named JJ Bugner. I don't know
Yeah.
if you've ever heard of him either, but he's
Yeah.
been a big inspiration for my investing style. So always kind of targeting dividend stocks to have that extra income coming in has been a priority for me.
Yeah, well, and, I love the dividends too. Basically, for what you just mentioned is you have that all of a sudden cash just shows up in your brokerage account. Now you can buy more shares, and then the next time around, more cash shows up, right? And it's just
Exactly.
the snowball just keeps rolling. But another
Yeah.
great thing that you said is that you love growth stocks too. And so you see, I don't know if you've seen it as much because you haven't been on Twitter very long, but the arguments people get into over growth stocks versus dividend stocks. But you just made a great point. Is like you're allowed to have both.
Yeah,
There's no
you
rule
don't have
saying you have to go one or the other. Like you can
that's
have
right.
both, right? It's literally such a dumb argument. I think personally, just because there's no reason to not have both, right?
Yeah, and I've seen people get in, like, really big arguments over this, like, you don't have to choose. It's the same thing as, like, you don't have to not own crypto, or you don't have to own real estate if you don't want to. You can go with just dividends, you can go with dividends and growth stocks, you can go with all of them.
Yeah.
I mean, the biggest argument or the biggest one that I see people argue over are would you consider Apple and Microsoft dividend stocks, or are they growth stocks?
Yeah, because they pay a dividend, but the yield is so small.
Exactly. I mean, Microsoft's 400 something dollars a share, and you're getting 75 cents, I think, per share. So
Yeah, so the yield is probably not even 1%, right? Like
yeah, I think it's
0.75% or
under.
whatever.
I think with the growth they had, I think it is under 1%, but they did increase their dividend this year as well. I think they increased it by 10%. but their overall yield is still under one. I mean,
Yeah.
you don't you can do whatever you want to, like you don't have to conform to what everybody else says you're supposed to be doing. You just have to do the strategy that works for you and make sure you're picking good quality investments.
Yeah. And you can have dividend stocks, you can have growth stocks and crypto and real estate. Like you
Yeah,
can. There's no rule saying you can't.
exactly. It's the life that you want to make, right? You don't have to let anybody else's opinion influence you if you don't want to.
I'd almost want to call Apple and Microsoft like dividend growth stocks.
That's what I typically call them. I think that's a good term for them. They pay a dividend, but it's so small. I mean, you're really focused on the growth for those, but every 25-cent dividend or 75-cent dividend does help, right?
Sure. Sure. Yeah, the brick by brick, every like you said, every 50 cents, every dollar, it just keeps
Yeah.
coming and shows up in your account, whether it's paid monthly or quarterly, but
Yeah, I mean, it's like if you passed a quarter laying on the ground, would you just not pick it up and walk by it? Because I would pick it up, right? Most people I think would pick it up.
yeah, because why wouldn't you? I think is kind of the
Exactly. It's
idea.
free money.
Interesting. Awesome. Awesome talking to you. I do wanna pull up your Twitter handle just to show people where they can find you on X. Are we calling it X or are we calling it Twitter?
See, I've I had a personal Twitter back in probably since 2011, so I do still have that, but I haven't posted on it in years.
Right.
Um, I still call it Twitter, but I know probably the correct term is X now.
So yeah, right here at Outdoor Finance, as I mentioned, just growing quickly, almost to 2,000 followers in what's that, less than 6 months, eh? Or just about 6 months?
Yeah, just about. Yeah, I mean, it's been really incredible. It, it it's mind boggling to me that people want to listen to me. Right, I'm just very thankful for all the people that have come to my account, and there's been overwhelmingly positive comments and people supporting each other. So I hear a lot of people talk negatively about the finance community, but overall, I mean, it's been a good experience. I think people are very encouraging and very helpful to the fact of you don't have to be a millionaire, right? Like everybody starts somewhere. So you can either have started with nothing, you can have started in a middle class setting. I mean, our whole point is to help each other grow and to pick each other up. And, if you have advice to give as far as encouragement or, just anything at all, just help each other out. You don't have to be hateful to one another in the comments, but obviously we do see that every now and then in there. But my advice to anybody else who wants to start this kind of thing is just continue to invest, find a few people who are like-minded and interact with you well, always support your other followers, and make sure that you don't let the one negative comment overshadow the 100 good ones, right?
Yeah, that's great. So, like I said, that link will be in the description. Definitely give Seth a follow on Twitter at Outdoor Finance. And before we wrap up, actually, I've still got quite a bit more that I want to talk to you about. Um, Next, I'm going to kind of just pick your brain a little bit here, and I'm just curious, how much do you know about like the Canadian companies that are talked about on Twitter, or that you may have seen in YouTube videos, or even listened to me on? I know you've listened to a few other episodes of the Passive Income podcast. So, what's your take on anything that you've heard of or even learned about? Or
So from the Canadian company standpoint, I don't know a ton about them, but I have heard you talk about the fact that almost all Canadians invest in Canadian banks because they are pretty much surefire ways to have growth and have dividends. I remember on one of the episodes, I think you were talking with Lindsay Stamp, if I'm not mistaken. You asked her how long she thought the bank, I think it was the Bank of Montreal, had been paying dividends for, and it
yeah,
was like almost 200 years. It's absolutely insane. So I know that Canadians typically invest in banks more than anything else. It's what it sounds like, at least.
yeah, that's a great take, and you're correct. Bank of Montreal has been paying a dividend since 1829. So 5 years from now will be the 200-year
Insane.
anniversary.
Yeah, it's insane. Canada wasn't even a company, a
That's
country then.
that's right. That's right. You learned that too from listening to me, didn't you?
I did. I figured you were going to ask me this, so I had to make sure I was ready for this. I want to be one of the few people who get it right. Canada was founded in what, 1867, I think.
Oh, that is awesome. That is awesome. That is right. That is correct, yeah. And so, yeah,
I
so
didn't want to
just
be
to
one of
kind
the
of
people that gets it wrong.
what's that?
So I didn't want to be one of the people who gets it wrong because I think you ask everybody that.
Well,
Seems
you're the first American that actually knew the answer, but you did either hear me give the answer before or you looked it up, but, um, just to kind of round out that topic of the Canadian banks paying dividends for, hundreds of years. Bank of Montreal, 1829. Bank of Nova Scotia started paying a dividend, I believe it was 1833. CIBC, which is ticker symbol CM, and TD, which is Toronto Dominion, started paying dividends in the 1850s, 1857-ish, that's range. And then Royal Bank actually did start paying a dividend after Canada became a country in 1870. So yeah, the Canadian banks are definitely, a huge part of the Canadian economy and the Canadian investing strategy for sure.
yeah. I do want to ask you on banks being a topic. 'Cause obviously, the primary mode of investment for Canadians tends to be banks. It seems. What are your takes on trustworthiness of banks? Because we get some bad reps as far as some banks here in America, right? Like Wells Fargo, Bank of America, they have been caught in the past doing some pretty shady things, and a lot of people don't trust them anymore. Obviously, a lot of people still bank with them, but they're not exactly the most. They don't have the cleanest rap sheet, right?
Right.
So, what are your take on Canadian banks versus a lot of the American banks in that regard?
Yeah, a great question, and a few things to kind of take away from there. The regulations are so different in Canada. Would be very, very difficult for any of the big six Canadian banks, the five I mentioned, plus National
Mhm.
Bank. It would be very, very difficult for them to get away with anything shady because the regulations
Yeah,
are set up so much tighter here. And and then the other kind of the big, big difference between Canadian banking and US banking is there's literally after the big 6 I just mentioned, maybe 3 or 4 more banks, and then that's
yeah,
it. You've got, like, probably 10 banks in all of Canada, right? And
right,
whereas in the US, you literally have thousands and thousands of different,
yeah,
whatever, like,
yeah,
First and Main Bank of downtown whatever, like, right? So there's just
yeah,
all those regional banks in the US. We just don't have those, regional banks like that here in Canada, so that's another huge difference where I know it seems quite often you see one of these regional banks get into trouble down in the US, and then all of a
mhm,
sudden they're they're gone, right?
right.
So yeah, those are the 2 biggest differences, the tighter regulations and the fact that there's literally only 8 or 10 banks here compared to thousands in the US.
Yeah. Yeah, I will say, I mean, I've never, knock on wood, I've never had a bad experience with the bank. I've had a debit card and a credit card hacked a couple times, right? But I've never not been given back my money. And that, I used to bank or still have a Wells Fargo account, and they've always been really good to me. But sometimes it is a little hard or a little heavy on your conscience when you hear about all the bad things that a
Yeah,
company's done. So I will in the future be moving that account away, probably to a local credit union or maybe another bank like Chase or SoFi in the future. But
right.
still, I've never personally had a bad experience, but I know a lot of people have.
And then just kinda to add to your, comment too about Canadians investing in banks, the oil and gas sector is also and utilities is also very big, for Canadian investors. I just kinda wanted to throw that out there as well, just to
Yeah,
which
yeah,
I
I
be
completely forgot about that. I remember you talking about the banks on one of your episodes, but yeah, you're right. I mean, oil and gas for sure, railways. I mean, those are big time in Canada.
yeah, exactly, exactly. Okay, so before we do wrap up, a few things that I like to leave with. First, I like to just ask you if there's anything else that, you'd like to talk about that we haven't, discussed yet?
Um, Not particularly. I mean, we've gone over a lot of different subjects. I mean, I think we've really had a great conversation here today, right? Like we've talked about stocks, we've talked about Bitcoin and crypto, we've talked about real estate,
Yeah.
um, being kind to others, right, online. So
Yeah, that
in the
might be the
future,
best, takeaway from this entire
yeah,
conversation is just, you know, act like a normal human being online, you know?
yeah, yeah. In the future, if you ever have me back on, I do hope to be a little bit more educated on the subject of real estate and crypto. This is very kind of new to me, and I own a little bit of crypto at the moment, but I don't own any real estate. So maybe a few years from now we'll come back together and it'll be another really good conversation, right?
Yeah, exactly. I definitely would love to have you on one of the live streams where we get a few other people and have like the roundtable discussion. Those were always a lot of fun. So I definitely would love to have you on one of those in the
That'd
future.
be awesome.
And then a couple more things. I know I'm
No, you're good. You're good, man.
um you're in Carolina, North Carolina. And
Yes, sir.
so what are your thoughts on the Carolina Hurricanes? Obviously, I'm in Canada. Hockey is huge here, so
So I'm not a huge hockey guy. Now let me start by saying I do think hockey is super entertaining. Um, I do like watching them. I will always support the Carolina Hurricanes because that's from my home state. I'm not a huge hockey guy. I think they originally were like the Boston. Was it what was it, the Boston
I
Whalers
know
or something that came down?
Hartford Whalers. I think they were the
Hartford
Hartford
Whalers.
Whalers and then moved to Carolina in
Yeah,
around what was that 2001 or so?
yeah, and I think shortly afterwards the Hurricanes won the Stanley Cup back in the early 2000s or
2006.
mid 2000s. Yep. So I mean, I've actually never been to a Hurricanes game, and I have never lived farther than like an hour and a half from their stadium in different directions, right? But that's in the future. Me and my wife are going to go to a Hurricanes game together because she went to one with her best friend last year, and they both had a great time.
Yeah, hockey is a lot of fun. Like you said, it's very entertaining, very fast paced, and obviously at that level, because again, here growing up in Canada, I've seen hockey at every level from well,
Right.
myself as a kid playing as a 5-year-old and watching other, as I got older, watching other kids play and I've watched every level of hockey, whether it's, junior hockey or um, AHL, NHL. And so when you get to the level of the NHL, it's just amazing talent, as you would expect for any professional sport.
Right. Yeah, and in here where I'm at, there's really no access to any kind of recreational leagues for hockey for kids, right? Like, so it wasn't a thing when I was growing up, unless you lived maybe in Raleigh, where they do have the arenas, the ice skating arenas, and
Yeah.
the Carolina Hurricanes. But I do think it's very entertaining. For me, primarily though, I'm a big football guy. I
I was
like
going to say
baseball as
that
well.
next.
I like
I was like, you
basketball.
look like a football guy.
Yeah, yeah, I love football. Football is specifically, I love college football. I like NFL too, but I'm really more of a college sports kind of guy.
Right. So who are your football teams?
So for the NFL, it's the Carolina Panthers. I have to pick my home state's team again. I feel very loyal to my home state, right?
That's good.
Um,
That's good.
and then for college, primarily East Carolina University, the Pirates. That's where I went to school. Now they did not have a very good football team last year. I think they went 2-10, so it was kind of hard to watch them. But yeah, always got to be a Pirate. Bleed purple and gold, right?
Awesome. That's great. No, it's great that you support your home state teams and support your alma mater as well, right?
Right. Yeah, we every now and then we'll get a really good year and we'll beat a lot of our in-state rivals. But last year was it was hard to be a Pirate fan last year, and same thing with Carolina Panthers. It was really hard to be a Panthers fan last year.
Awesome. Before we wrap up, I'm going to give one more shout out here. Receive a free passive income posse. Turn that cash register around coffee mug with any purchase over 100 Canadian uh, Canadian dollars before taxes and shipping at buyinvestingshirts.com. Use code word posse for a 5% discount on your purchase. Link in the description below. So definitely check that out. And I've got all the merch myself: the hat, the hoodie, the mug.
Yeah, I might have to get some of that myself. I really dig the hat.
Nice.
Yeah, obviously I'm a hat guy, right?
Right, right, yeah. Okay, so wrapping up, awesome. Thank you so much for being here. Thank you so much for spending time with me and everyone here on the Passive Income podcast. And welcome to the Passive Income Posse.
Yeah, thank you so much for having me on. And like I said, it was great talking to you, meeting you in person, and I hope people can find value out of this episode. It's been a really good time. I've really enjoyed it.
Yeah, great conversation. Loved having you on. Like I said, definitely we'll have you back on in the future. And if you're still here watching nearly 55 minutes later, please be sure to hit like and subscribe.